my name's James Nicholson. Buy-to-let interest rates are down again, the second time in 2 weeks. This is with one of the biggest lenders, the Mortgageworks. I'm going to go into that with all of the rates, all of the fees, all of the loan-to-values, everything you need to know to make a decision. And I want to give a quick update as well on some stuff about the American interest rates, because they potentially are coming down way sooner than you might be thinking. Now, before we jump into this, as always, do make sure you smash that subscribe button and hit the bell notification. We're nearly at 20,000 subscribers now. It's so close. Just get that little finger out, smash that subscribe and hit the bell. Let's get to 20,000. We're very, very close now. And while you're here, smash like or tickle the like button. Do something to the like button over there, guys. That really helps us with the YouTube algorithm. Every single person that likes it is helping those views grow. We got 2 million last year. We want to hit 5 million this year. So help us do that by smashing that like button. So Nationwide have a division called the Mortgageworks. I've got a few mortgages with these guys. And tomorrow, they're dropping their rates. They've already dropped the rates officially, but tomorrow it's actually in their online portal. And so you can self-serve, which is good if you're an existing customer, or go for a broker if you're a new customer as well. And this is good news. And the reason that rates are still starting to come down is there's a lot of talk. This weekend, we've had some talk from the Federal Reserve saying that they probably over-tightened already. Their inflation is pretty much below 2% now. And so it takes a while for undoing those interest rate rises to have an impact. And there's a thought process that maybe they've gone a little bit too far. I think they have. I think the UK, the Bank of England has as well. I think inflation is on the way down. I think it's going to just go down with time. And I think the damage that they're going to do with holding these interest rates higher is not going to help anyone. Also, when the interest rates are higher, it means rents are higher, it means mortgage payments are higher, which feeds into the inflation anyway, which is very frustrating. So Mortgageworks is a big lender, and they've got some new deals out tomorrow, as we said. So if you're a buy-to-let investor or you're thinking about buy-to-let, go and check these out. They've got a 2-year deal, which they are fixing at 3.99%. Very, very nice. And so the fees on this one are kind of high, but depends on how much you're borrowing, doesn't it? They're 3.995. We have seen lots of higher fees. They did have a rate that was 3.69 recently, but it had a 3% fee, which could be significantly more. If you're borrowing 100 grand, 6 grand, isn't it? So it is quite a lot there. So a 2-year deal, I think that's a decent rate in today's market. The loan to value on that is 65%. So if you're a new buy to let investor, means you need a 35% deposit. If you're an older one, hopefully you've created some equity or added some value in the meantime. They've got a 3-year deal. So let's have a look at the 3-year deal. This one's pretty good as well. It's slightly more expensive. So it's 4.39%. And the fees on this one are a lot cheaper. I think you're going to see fees like this for a while. I don't think that that's going to change massively. And the loan to value is 65% as well. So shows a lot of these guys on their best rates. You can get 75% loan to value. You can still do that. But a lot of these guys are giving their best rates at 65% because that gives them that certainty you're not going to go into negative equity. So that's interesting here. And so the last one that they've got is the 5-year deal, which also goes live tomorrow. And that is 4.49%. And the fees on that one are no fees. It doesn't show a fee. So maybe that's no fee. Check that out when that goes in the portal tomorrow. But the loan to value is 65% loan to value as well. So I've seen you guys talking about mortgage swap rates have been going up. That's where the banks borrow their money, indicates rates could start going up again. I feel, and I've been doing a lot of research and reading about the Federal Reserve stuff this weekend, the Federal Reserve have talked about now, again, this weekend, that rates are likely to come down more quickly than we might expect. They feel in America unemployment could start to drop or increase even, so you could get more unemployed, and that could happen very, very quickly. And that's a real concern for the Federal Reserve. They've got to be seen to be getting rid of inflation, but if you look at the America 6-month inflation data, it's pretty much below 2% solidly now. And so that's where they are. That's where they want to get, they wanted to get to. And now they've got to look at, okay, how do we come out of this now? And so what we're expecting to happen this week is the Federal Reserve to still hold interest rates, which I think is the wrong decision, but they're still likely to hold the interest rates this week. And now pretty much everyone, including the Fed's hints, are that you'll see drops in interest rates at the Federal Reserve in America in March, which is not long away. So you're talking around 5 weeks from now, you could see the first drop in interest rates. Now, we're all in England, most of the channel watchers on this. Why does that matter to us? Well, we follow the Fed. So we copy the Fed. And there's a reason why the Federal Reserve meeting is this week on, I think it's Wednesday, and then our meeting is the next day, right? We always go second, and that's because our currencies are tightly aligned. Now, I'm not saying that we're going to drop in March, but if they start to drop interest rates, we will start to follow. If we don't, let's say that they drop their interest rate and we don't, what will happen then? Well, the pound will get stronger. So that means when we're buying fuel in from abroad, that means when we're buying all these goods from Asia and the Far East and all these places, they will get cheaper, which in turn will drive down the inflation even more, which is good. There's talk with world leaders now and like analysts that there's a risk that we could go into deflation, which is much worse, because if we go into deflation, it means companies can't put their prices up. It means that companies will sell less and they'll make way more redundancies. That will impact house prices. That will impact your job. That will impact any business that you work for or own as well. You don't want deflation. You want it to be leveled off now at a low 2% for the next few years, and people to get pay rises and catch up with stuff. So let me know, what do you think about this rate by the Mortgageworks? I mean, this is another cracking rate. They have had a better rate, but it had a higher fee. This is moving in the right direction. All of these, would I consider that? Definitely. I'm actually going to look at one of these this week. I've been waiting. I was actually going to do one last week, but I didn't have a chance. I had a late Christmas party that I went out to last week. So let me know your thoughts on all of this. Let me know, do you think the Fed's going to drop the interest rate, cut, hold? What do you think they're going to do this week? In the comments, smash the like button. Go and check out in the comments the link to the fundamentals of property investing. Is absolutely a game changer for you guys. It's so cost effective, less than £50 one-off charge. Learn all of this stuff while the market's cheap. This is the time to learn property investing. So go and check that out while you're here. Do subscribe. Check out all the other content on the channel, including this video right here.